We're waiting for the attendance to
This meeting is being recorded.
Finish joining, so we're going to start in exactly 1 minute. Thank you. Okay, good morning, good afternoon, everyone, once again. Thank you for joining us. This is the fourth version of the CBDC broadcast. I'm Carlos Leon, and I'm your host in this series of CBDC broadcasts. The CBDC broadcast follows a 60-minute format in which our guests will provide expert insight into the latest developments and innovations influencing the discussions and implementations of CBDCs today. For today, there's a main idea. Each country has a different set of features and objectives that make the CBDC's design and rollout a tailor-made process. In this fourth session of the FNA CBDC broadcast, we're going to talk to two guest speakers from Bank of England and the Bank of Canada, namely Mehregan, Ameri, and Francisco Rivadeneyra. We are eager to have a view from two G7 countries about the motivations, challenges, and design choices that could fit their jurisdictions best. Today, our agenda is the following. From now, we're going to do some housekeeping, and we're going to show you some headlines in the news and to make the usual introductions. After those 5 introductory minutes, we're going to have the talk with our two guests about CBDC's motivation, challenges, and design choices, the cases of the United Kingdom and Canada, and about 2:45 UK time or 2:50, we're going to start our session of question and answers. To have your question and answers available to share them in the forum, please ask them using the chat functionality that you have in Zoom. So, about the CBDCs in the news, this is going to be a very brief, sorry about that. Perhaps one of the most interesting things in the news lately is that the e-krona from Sweden, they have made some studies about how it can be integrated into banks' existing IT systems. So the Riksbank has tested that there is a good potential for offline e-krona transactions to take place. The next news has to do with something related to stable coins, in which a couple of days ago, the United Kingdom announced that the UK is thinking of bringing stablecoins within payments regulatory perimeter, which is a very interesting news as the UK plans to have a global crypto asset technology hub. So before starting our conversation, I want to tell you a little bit about FNA. FNA is a leader in advanced network analytics and simulations. FNA software used to uncover hidden connections and anomalies in large, complex datasets. It's used to predict the impact of stress events and to optimally configure financial systems and infrastructures. FNA is trusted by the world's largest central banks, government authorities, commercial banks, and financial infrastructures. Related to CBDCs, in FNAs, we have developed a simulation solution, which is at the forefront of innovation in the fintech market. This solution is an agent-based modeling software that enables the user to rapidly and flexibly test, model, and simulate the economic and financial stability implications of introducing a CBDC or some other form of retail digital currency. Some of the benefits that I would like to highlight right now is that this type of model allows the user to test different design choices, to understand CBDC adoption outcomes related to disintermediation, financial inclusion, and payment behavior, to simulate shocks and stresses, and at the end, to improve decision making. So about our speakers, we have Dr. Francisco Rivadeneyra, who is the Director of CBDC and FinTech Policy and Research at Bank of Canada. Francisco leads a team developing policy advice around CBDCs, electronic money and payments, and the impact broader financial innovations could have on central banks. He's an active researcher exploring the intersection of technology, payments, and finance. His current research studies the security and convenience trade-off of digital currencies and use of AI in liquidity management. Francisco holds a PhD in economics from University of Chicago. We also have Mehregan Ameri from Central Bank Digital Currency Senior Specialist at Bank of England. Mehregan is Senior Central Bank Digital Currency Specialist at the Bank of England. She's working towards a PhD in economics at the Universitat Pompeu Fabra, where her research topic explores the redistributive effects of monetary policy. Her career includes experience working with the Financial Conduct Authority and Goldman Sachs. So, as we already mentioned, all your questions and answers, please ask them with the Q&A button at the bottom of your screen. So, good morning, good afternoon, Mehregan, good afternoon for you. Francisco, good morning for you. Thank you for being here. If you would like to make a very brief introduction besides the one I already did, could you start with this perhaps?
Thank you, Carlos, and esteemed friend from the world of payments research. So thank you for the invitation, and also to the FNA team. Always looking forward what FNA is doing, always at the forefront of simulation work, very serious work. So very happy to be here. And also I should start with my disclaimer that these are going to be my views and not the ones of the Bank of Canada. And just to give you a very brief introduction of what's the angle I'm coming from, I lead a team that coordinates the policy, the tech, and the economic research. Ultimately, the decision of the design and issuance of a CBDC will have to integrate these three aspects. So that's what we're trying to work hard at, trying to understand what's the framework that helps us integrate the restrictions, the technological restrictions, but potentially also the capabilities of new technology with the inherent trade-off that are always present in policy making. Thank you. Thank you for the invitation.
Thank you for being here, Francisco. Mehregan.
Thanks. First of all, thank you so much for the invitation to speak at your webinar. Well, you did a great introduction. I guess I will just add to that basically I work as a senior economist at the bank and specializing in CBDC. And my area, the area that I specialize in, is basically just looking at the economic implications and design choices for CBDC. And my background previous to this was working at the Financial Conduct Authority. I was working on payments regulation and financial stability, so it was quite relevant basically to this area.
Great, those are great introductions, and this is a great panel. So first, can you give us a brief update of the CBDC project in each jurisdiction, mainly the stage of development, and the type, if it's retail, wholesale, directed, intermediated, of the CBDC being considered in your countries? I don't know, ladies first, Mehregan.
Okay, I'll go first. So in the UK, so far, there hasn't been a decision made to introduce a CBDC. We're currently in what we call a research and exploration phase to see whether there is a case for a retail CBDC. We're not considering a case for a wholesale CBDC in the UK. Last year, we formed a task force with the Treasury, and we're jointly exploring the potential case for a retail CBDC. We've also formed an engagement forum and a technology forum where we can engage with the stakeholders from industry, academia, civil service, etc. Later this year, we're going to publish a consultation paper, which is going to set out our assessment of the case for a CBDC in the UK. If we decide that there's a case for it, then we're going to move to the next stage, which will be the development stage, in which we would do an in-depth testing of optimal design and feasibility. This stage could take several years, and if we decide that that CBDC is operationally robust, then the earliest date for launch of CBDC in the UK would be the second half of this decade.
That's great to know. That's very interesting. Francisco.
Thank you. Well, the bank has a long tradition of research in payments. So the agenda on e-money and e-payments started almost as a single-minded research agenda a week ago. But the CBDC idea formally started as a contingency plan in 2020. What a contingency plan is, it's the preparation to the ability to issue if the need arises, right? So what the bank is doing is preparing all the technology research, the policy standing, as well as the economic research to be able to issue if needed. So at the moment, the bank does not see a need to issue, but as I mentioned, issuance would take a long time to be able to prepare, right? It's a lot of research, a lot of technical implementations, potentially engaging with lots and lots of stakeholders, potentially also many vendors. So the bank is building that capacity to do so. I should also stress that ultimately the decision is not the bank's. The bank is leading the research, is thinking about these issues, naturally as a monetary authority of Canada. However, it is not the decider. The decider is the government and Canadian elected officials. So that's very important. So very much of the timeline and the ultimate design has to be passed through Parliament and those processes. So the focus is a retail CBDC at the moment, although the bank has done quite a bit of research in wholesale applications of new technologies. Many of you might remember Project Jasper. Right now, the focus is a retail CBDC. Now, with respect to the model, it is still very open, but most likely it's going to be an intermediated model. Why is that? So part of the principles of the CBDC coalition, and the CBDC coalition is a group of central banks of the G7 plus the Swiss National Bank and the Riksbank, in which we were thinking, what can we say about that is general about CBDC? And one of those principles was coexistence of private and public money, right? So that as a principle already tells you CBDC has to coexist and interoperate with whatever already exists in the market. So an intermediate model is also very likely to be the one we go ahead. So that in a nutshell is where we are at the moment.
Thank you. Let me wrap up a little bit. Both countries, I mean, both jurisdictions are working on CBDC, on retail CBDC. Wholesale has not been considered for some reason that perhaps we can discuss if we have some time left in the Q&As, and most likely it will be an intermediate CBDC. That's like the wrap up of thing of this section. And also, there's no hurry. Everyone is like, I mean, in the UK and Canada, they're taking a lot of time, or not a lot of time. I mean, time to try to get it right. Yeah, I mean,
time, yeah.
there is no schedule. I mean, we cannot know how much time this can take to make it right. So perhaps that's a good way to wrap up this first question. Thank you. So from now on, we're going to talk about retail CBDC, as we have confirmed that the case that is being considered right now in Bank of Canada and Bank of England is retail CBDC. So our second question is, in both jurisdictions, what are the main motivations for considering a retail CBDC? What are the use cases for retail CBDC in Canada and the United Kingdom? So let's switch this time. Francisco, you first.
Thank you. So one way to approach this question is to ask a very principled question. What is the role of public money in the modern monetary system, right? For example, why do we have cash in the first place? So we can ask what roles do cash fulfills today? So cash provides a universal access to a safe, private, low-cost means of payment, right? So It also promotes competition and efficiency. It's always the outside option for other means of payment, electronic means of payment. And it is also, very importantly, one of the ingredients that allows the central bank to control the unit of account and having a uniform monetary system. So in other words, simpler words, it allows to maintain monetary sovereignty, right? So that's what cash does today. So in this context, we can ask, well, what's the role of public money, right? And retail public money. So as the economy digitizes and cash is becoming less and less important, we can ask, is there a role for a replacement of cash in the digital economy, right? And the bank has set up two scenarios that can help us think about the motivations. The first scenario is one in which cash does not is no longer a useful means of payment for a wide range of Canadians. So granted, cash is no longer used as much as in the past, but it's still one that anyone can use anytime. So what would happen if a large amount of merchants do not accept cash anymore? So that would hurt certain groups of the population, especially hard, right? They might not be able to make that transition to electronic payments. So that's an important role, right? There wouldn't be universal access to a safe private means of payment that cash provides today. And the other scenario is one in which a digital currency could be private or another issued by another country, meaning a CBDC, starts making inroads into the Canadian market. So that's a pretty bad situation in which uh, the central bank wouldn't have the ability to control the price level, right? So there would be a danger to the monetary sovereignty. So that might be another situation in which CBDC could be a good response, right? So I think we can think of those two scenarios. They materialize how we think of the public policy objectives of public money.
You're on mute, Carlos.
Sorry, sorry. That point of view from the role of public money is really interesting, and I think it has a lot of value to try to understand why a CBDC, and if there is a case for a CBDC really in each one of the jurisdictions. Mehregan, your turn. Thank you.
Thanks. So I think for us, when we think about motivations for CBDC, what we try to think about is not motivations for CBDC in today's world, but kind of in the future world, and what the economy will look like in the future. You know, what will be the needs of consumers, what will be the trends or risks that are emerging. So, for example, as Francisco said, there are cases, for example, like decline in use of cash that we have to consider. So the most important things for us are actually public policy benefits from CBDC. So, for instance, CBDC would be a liquid, safe asset that will always be accepted as a form of payment, and therefore it would anchor the public's confidence in the monetary system. It could promote interoperability between different forms of private money. It would maintain monetary sovereignty. It could increase financial inclusion or promote innovation and competition in the payment sector. So these are some of the public policy benefits that we're considering. The key consideration for us is which one of these benefits can uniquely be delivered by the central bank versus which one of them can also be delivered with innovation in the payment sector. So that's actually one of the assessments that we're making right now. And we also haven't yet put a weight on which one of these motivations are the most important ones. We're going to make this assessment and then publish this in our consultation paper later in the year.
That's very interesting, and it's very related, not similar, it's very related to what Francisco just said. And you both mentioned something which is very interesting. I mean, which is like, we're looking into the future and we're seeing like in the future there's going to be innovation and there is very likely a declining use of cash. So this is a very interesting topic. Is this also very related to what is going on with cash? I mean, we have to ask ourselves perhaps a little bit later if this is going to be something which is going to complement or to substitute cash. So that's something that perhaps we'll address a little bit later. So thank you both for this. The third question that for today is, which are the main pros and cons of rolling out retail CBDCs? Are there any risks when deciding to roll out retail CBDCs? Mehregan, your turn.
So in terms of pros for us as a central bank, the main pros are the public policy benefits that I mentioned before. There are certainly some risks, and we're considering those as well. So for example, one of the risks that are probably spoken about the most is what we call banking disintermediation. So basically, this is the idea that because CBDC would be a very easily available and storable form of central bank money, it could promote an outflow of deposits from the banking sector, and which could basically result in a shortage of liquidity. We're looking into kind of solutions for this, but one of the things that we're considering is basically setting a limit on the use of CBDC during the transition period. The limit could either control the speed of outflow or the amount of outflow. And it would only be used to kind of help the market and the banks to kind of adjust to the new normal. So it would not be used to kind of maintain the status quo. Another risk that I think probably is also well known is the cyber risks. We're quite aware of this, but if we do launch CBDC, we would consider this to be a major national infrastructure, just like RTGS. And so we would make sure to design it with the highest possible standards. So this is actually a risk that we know, but we think we can we handle.
That's very interesting. Francisco.
I should preface my reply saying we're considering CBDC very, very carefully, right? So we understand that this is a major policy intervention, so it has to be done extremely carefully. So on the opportunity side, or the pros, as you mentioned, so preserving access, universal access to central bank money, I think that's first and foremost. Many things are derived from that, right? For example, the monetary sovereignty, the uniformity of money, the efficiency of trade in payments, efficiency in payments. So that's one of the most important ones. Some have suggested that CBDC could be used as a monetary policy tool, right? And that's been discussed largely academically, I have to say. And the reason I mentioned that it's largely academic is because when you think practically about using CBDC as a monetary policy tool, there's a lot of challenges in trying to do so, right? Maybe you need to collect a lot of data if you want to have, say, for example, differentiated monetary policy effects by, say, the balance that you might hold. Is it something that we can practically have? Let alone the need of potentially having to remove cash if we want to have negative interest rates on CBDC, right? So, and the bank has put out at the outset that cash is going to be supported and provided until Canadians demand it. So that immediately puts the discussion of CBDC, a monetary policy tool, out of the question, I would say. Another aspect of CBDC is privacy in payments, right? So cash provides that today, but I should say it's incidental to its form, right? So early in the 17th or 16th century, when banknotes started kind of being developed, nobody thought about privacy, right? But now with electronic payments, the feature of privacy that cash provides becomes really salient, right? Potentially, many of the electronic means of payment that we have today can use those data to sometimes provide good stuff, for example, personalization of your products. Think of Amazon, right? But it can also hurt some consumers. For example, with price discrimination, right? They know your type, they know your willingness to pay, and that can be hurtful. So CBDC could be that means of payment that provides a minimum level of privacy, helping consumers. Another one, offline payments. So cash is the only instrument that can provide offline payments. So that's a very important one. I should also say that providing offline payments in an electronic form is very, very hard. Technically, very hard, right? So that's something that we're exploring, and I think no one in the private sector is looking at that particular use case, right? And lastly, competition and innovation, right? Having low cost outside option to other electronic means of payment could also help the efficiency of the payments ecosystem. So those are some kind of benefits. Now, on the con side, well, first and foremost, the risk to financial stability, right? What's going to happen to banks, right? Are there going to be a large migration from deposits to CBDC? That's something we keeps us up at night, and we have to think very carefully about that. As Mehregan mentioned, there's tools to manage these. For example, transfer limits or caps on total balances. So I think it's possible, and we think it's manageable, and it's not as big of a risk as you might think immediately when you get to the issue. Security risk is the other part, as Mehregan also mentioned, and it goes out without saying, but I think we need to mention a system of a national scale has to have the highest levels of cybersecurity, absolutely, and bar none. So I would say in balance, you have all those potential benefits, and the risk are, well, the ones that we have to manage: security risk, financial stability implications.
I think you both agreed on most of them, but I think that you may emphasize both on the financial stability part in the to try to avoid deposit migration from, I mean, banking deposits to CBDCs, and there are some ways that have been largely discussed in literature, as you mentioned, caps on transactions, caps on balances. And I wonder if, and this is like an open question that we can address afterwards, if this has to do with the properties of money, I mean, with the functions of money. Are we talking, I mean, CBDC is intended to be store of value, medium of exchange? I would say that CBDC is intended to be a medium of exchange if we're thinking of putting a limit to the amount or to the balance you have. If we have whatever balance and we put an interest rate to this CBDC balance, then CBDC is perhaps going to fulfill a store of value function. So there, the risk of migration and disintermediation, it's large. But I agree with you. If we use some measures, some tools like caps and limits, perhaps we will restrain CBDC as a medium of exchange, and that's it. That's very interesting. Thank you.
That's a good point, Carlos. If I follow up, although it has been implied in what we've been saying, at least from the point of view of the Bank of Canada, we're thinking of a non-interest bearing CBDC, right? And that's very important to stress. Sometimes we say that as cash-like CBDC, right? But I think it's better to call it just non-interest bearing, right? And as you say, a non-interest bearing with potential certain limits can be the tools to manage some of the financial stability risk. And this echoes the second principle of the CBDC coalition, which is do no harm. You know, we have a good monetary system, we have financial stability. CBDC shouldn't endanger that whatsoever.
I agree. I mean, the interest of everything is important. Mehregan.
I just wanted to address your point about sort of qualities of money. We have said before that if we do set limits, it would be a limit in transition, and part of it is exactly because what you say is that we want CBDC to kind of fulfill certain qualities. We want it to be a store of value and a medium of exchange, and we don't want sort of managing this risk of back-end intermediation to interfere with these qualities of it as money. Yeah.
Great. That's nice. So let's go to the next one, the fourth question. Do you think is there a first mover advantage in rolling out a CBDC? Is a neighboring country decision to roll out a CBDC a motivation to fast track a CBDC? Francisco, you first. I think we're switching.
Yeah, thank you. So as I said before, I think what is crucial is to get it right, not being first. And I think this is a sentiment across all the leading central banks looking at CBDC. For example, many countries in particular in the G7 are discussing the CBDC principles In fact, last year, under the UK presidency, the G7 issued the CBDC principles articulating what would be the right way to proceed with CBDC. And if you read those principles, you realize there's a lot of work that has to be done, right? You have to think carefully about the design. You have to think carefully about the implications. You have to engage with stakeholders, the financial system, potentially new entrants, so that that principle of the coalition, which I was mentioning just before, do no harm, is fulfilled, right? And that also provides me a moment to mention the third principle of the coalition, which is CBDC should provide efficiency and innovation, right? So with those three principles, innovation and efficiency, do no harm, and coexistence of public-private money, you realize there's lots of constraints. So we need time to proceed carefully in the development of CBDC. With respect to neighboring countries potentially issuing ahead of one or another, um, I should stress that there's a lot of cooperation and a lot of discussions among central banks. So I do not think that the issuance of a country will necessarily accelerate the pace of development of another, right? There would be cooperation and potentially discussion between officials in terms of how to manage those risks.
Great, Francisco, thank you. Mehregan.
Very similar to Francisco. Definitely, the pace at which other countries are launching or not launching CBDC is not a factor in our decision. If we do launch CBDC, this could potentially have a huge impact on the UK economy. And so what we consider is really just the needs of UK economy and the consumer needs. And we're just working on our own time scale, and would definitely not fast track decision or a potential launch because another country is doing it before us. And as Francisco said, we are collaborating with other countries. So for example, UK is working with 6 other central banks, including Bank of Canada and the Bank of International Settlement, to sort of assess the different issues around CBDC. So there is definitely international collaboration going on.
That's great. And I think this is they're very interesting because you know that in the news, it's very common to read or to hear that everyone is saying, well, China already has like the e-yuan, and it has a very large pilot in 11 large cities. So China is going to be in the front of the CBDC market. Well, yeah, what is to be in the front of the CBDC market? I mean, I agree with you that perhaps it's better to be right rather than being first. So thank you for this.
So Carlos, if I may follow up on that, and just to kind of clarify, the fact that a country is at the forefront of CBDC does not necessarily imply that that digital currency will enter your market, right? In the particular case of China, the issue of internationalization of the yuan, it's separate, right? And it's a macro question that they have, and we know that for the moment, at least, they're not expecting and they're not signaling that they want the yuan or even the e-yuan to be used abroad, right? That presents other macro problems for balance of payment and other issues. So I think the risk has been overblown just to think of the idea that there's a CBDC and immediately gets being used elsewhere. And just to give you an example of how we can think through this, the ECB has already mentioned this potential risk of the digital euro being used abroad, right? And in their white papers, they have already discussed potentially working with other jurisdictions to avoid risks of the digital euroization of other countries that, for example, have high inflation or potentially payment systems which are relatively inefficient, and that those countries could be at risk of that currency substitution. So cooperation among different countries is important to reduce these risks.
That's very important, Francisco. Thank you. And I would add that even the Central Bank of China has some documents in which they state clearly that they don't intend to have like a international expansion of the yuan, but they're trying to solve their own problems first. I mean, that's and it's a retail one. So they're trying to solve their internal problems in the retail markets first. I mean, and so I think that your point is really valid and it's very valuable. Thank you, Francisco.
If I can add to that actually as well, just want to say that different countries have very different frameworks when they're assessing this. Just because sort of China has seen that it's important for them to have CBDC doesn't mean that other countries will make the same decision. As I mentioned, like when we think about sort of the benefits of CBDC, we actually think very carefully about whether private sector is better placed than the central bank to provide all of these benefits or not. So that's actually a very key factor for us in our decision making.
Yeah, and the whole point of this chat and of this webinar and the ones that are going to follow with some other central banks is precisely to be aware that CBDC is a tailor-made thing. I mean, each country has several considerations, several different objectives, and also obviously different inputs. I mean, features of the economy that will condition what a CBDC may attain or may not. So, thank you. The fifth one is a very practical question. Do you think the people of Canada and the United Kingdom want and are ready to have access and to use a retail CBDC? Mehregan.
So again, as with the case of motivations for CBDC, when we think about wants or needs, we can't think about today. We have to think about the future. So really, the important question is: will the people in the UK want it in the future when it's launched? For us, our priority again are the public policy benefits and the cases, but we do recognize that it's important to have good user proposition. If CBDC is not used, it's not going to deliver the public policy benefits. But we would prefer to kind of leave this question to the private sector because we think that they are actually much better placed than us to think about sort of future consumer needs. And that's actually one reason that our current working assumption is that the kind of model that we will provide CBDC with, if we launch it, it would be what we call a public-private platform model, which would basically be the case where we provide the core infrastructure, and then the private sector will use this to provide customer-facing CBDC payment services. And as we mentioned before, we recognize that the importance of good user proposition. So one of the requirements of this platform that we've said it has to have is what we call extensibility, which means that it has to be adaptable to use cases that we cannot foresee yet.
That's very interesting, Francisco. Yeah, so I mean, like with any new product, it's hard to predict if the public is ready for a new product, right? So from some survey work that we've done, we know that when you go to the public and ask, would you like a CBDC? If you don't explain what it is, they don't understand what it is, right? That they don't understand the. On one extreme, they might even confuse with a cryptocurrency, with proof of work and all that type of thing. On the other extreme, they might think it's just like their bank deposit, right? So just putting it out there. So we need to be very careful about making predictions of readiness. Leaving that aside, if we issue CBDC, there will be an effort to educate the public and ensure that CBDC is well understood and well received. So as part of our plan, the contingency plan of the Bank of Canada, we will engage with end users, with the stakeholders, to have that discussion with the potential users, and also, of course, have the feedback of what would be the appropriate design of CBDC that makes it a product that is well received and receives sufficient uptake.
That's very interesting. I think that touches a lot of key points about how the rollout of the CBDC will take place, and as Mehregan said, in the future. I mean, we should think not like if they're ready now, but how are we going to make to allow them to be ready to use and to want at the end as CBDC. Next question has to do with something that we already mentioned a little bit, which has to do with the privacy. The question is how to balance the delicate trade-off between privacy of transactions and compliance with know your client, anti-money laundering considerations. Francisco.
Well, the trade-off of privacy and compliance is a tough one. It's a tough nut. But I should start. Compliance is paramount, or let's put it differently. CBDC will include all the controls to ensure that it is fully compliant with current laws, while offering a sufficient level of privacy. So therein is the trick, right? So we're going to be compliant, no question about it. The question is how much privacy relative to whatever the current offerings provide. So how to do this, right? Well, we need to think about the economics of the trade-off between privacy and compliance. So on the one hand, an electronic payment system needs to collect data. That's necessary for know your customer, anti-money laundering, countering the financing of terrorism regulations, right? So that is kind of the starting point. CBDC will have to collect all that data so that it is compliant. Now, on the other side of the trade-off, other electronic means of payment that collect that data can use that data for other purposes. The central bank doesn't have an incentive to monetize the data. So just there at the outset, you see that how the trade-off can be improved for a user that is concerned about privacy, right? So the same data will be collected and there will be no monetization of that data. So that's on an individual level, right? But actually it goes much farther because privacy is a public good. What do I mean with that is that as a public good, if it's a good provided by the private sector, it's at risk of being undersupplied. What does that mean in practical terms? Is that companies that are collecting data from a bunch of people, they might not know your name, Carlos, but they might use your correlates, your characteristics to make predictions about other folks, right? So even if you might care a lot about your privacy, they might and you protect it personally, the fact that they're collecting data from other folks in the system can hurt you because the provider might use it to price discriminate against you, right? So I think in this sense, CBDC that provides privacy to a wide range of consumers could be also helpful. Now, this is a very complicated area. I think now that we think how big tech is entering into payments, DM is one example, but many other big techs are entering in different ways, right? Providing interfaces, for example, Apple Pay, Google Pay, all of those are just inroads into that. So there's a big potential complementarity between the data that big tech collects with the data they use for their main business line, right? So what's the role of CBDC in this world? How it could improve the trade-off for the wider public? It's something that we need to do quite a bit more research.
Those are great points. I'm going to touch some of them after Mehregan makes her point. Thank you, Francisco.
So I think in the UK, as well as Francisco said, this trade-off is a very, very delicate one. In the UK, it's the Treasury who's doing the assessment on sort of privacy versus kind of the need for transaction monitoring for financial crime reasons. But we have to remember that this is actually not that different from, and actually it's not at all different from commercial bank money or card payments or basically any other transaction that we have right now other than cash. And so just like all of those transactions, except cash, CBDC would have to comply with anti-money laundering regulations. So what this means is that some authority or institution within the whole CBDC network will have to be able to identify the customer and be able to verify that the transactions is legitimate. We're still kind of working on this issue, but there are some solutions around it. So for example, in the platform model that I mentioned previously, one possibility is that the core ledger only stores pseudonymous accounts and balances. And then the payment service provider who's providing the services on top of this is is the kind of entity in charge of identifying customers and validating their transactions and doing anti-money laundering checks. So this means that the central bank wouldn't have to hold granular data on users. It's also possible that sort of new business models emerge, and you have dedicated firms that verify users' identity. So this model we have right now, where the payment provider is the one who also applies the anti-money laundering checks, doesn't necessarily have to be the only model that exists in CBDC. So there are other solutions around this.
That's very interesting. We're about 5 minutes from starting the Q&A, so I'm going to speed it up. But before, I wanted to do like 2 comments about the paradox of the anonymity thing. The first one is people are willing to post what they buy, where they have a dinner on Facebook, Instagram, whatever social media they have, but they do not want a big tech or a central bank to have information of their payments. So there's some kind of paradox there. The second example of this paradox is that the European Central Bank recently published a survey in which they stated that they had to talk about digital currency in general when making a survey, so the people will answer if they cared about privacy and anonymity if a new digital payment product is going to be rolled out. And most of the people said that they don't care about the anonymity of the thing. But when they introduced the CBDC, I mean, a central bank form of digital currency, they cared about anonymity. So it's very interesting because they don't care that their private or commercial bank has all the information, but they do care that the central bank has this information, even if, as Francisco said, the central bank is not going to monetize these things. So it's a very interesting paradox, I guess. So as I said, we have 4 minutes left before the Q&A. So I still have 2 questions that I ask you to answer rather briefly, and I'm going to do my things briefly as well. First one, should CBDC serve as a complement or a substitute for central bank physical currency? I already lost track. I think it's Francisco first. No, sorry, it's Mehregan first. Sorry, you're right.
First of all, I have to say that the Bank of England has committed to providing access to cash as long as there's demand for it. And we're taking steps for that to address this. We consider CBDC to be a complement to cash, and this is because there are certain characteristics of cash that CBDC will not be able to meet. The most obvious ones is that cash is physical and it's not dependent on technology. And for example, we know that there are some people who prefer to make transactions in cash because it's easier for them to budget, or there are some parts of the society who are digitally excluded, and for them, cash will always be the preferred method of transaction. So because of this, we think of CBDC and cash as kind of complements to each other. Basically, we see that as the economy is becoming more and more digitalized, the needs of consumers are going to be more diversified, because you're going to have this segment of society who want to use cash, and then you're going to have a more digitalized segment of society who want to use new forms of money that might emerge. And so kind of providing a physical and a digital sort of type of central bank money will make sure that we meet the needs of all the customers in a more digital world.
Thank you, Mehregan. Francisco.
So 2 quick points here. So first, the Bank of England, the Bank of Canada has stated that it does not plan CBDC as a replacement to cash. The opposite. It will support cash for as long as Canadians demand it. Second, as mentioned about the principles of the CBDC coalition, public and private money should coexist, but also the current forms of public money, right? So we would expect to have an ecosystem in which CBDC, cash, and private forms of money coexist for the benefit of Canadians, right?
Good. Thank you for keeping it short. So I'm going to pass now to question and answers, because we have a lot of them. I'm going to try to respect a first in, first out algorithm to processing the questions. And let's try to keep the answers short because we have a lot, and I would like to have many of them as possible. So first one is, why does Bank of England, so this is for Mehregan, is not considering wholesale CBDC?
So the reason for it is because in the UK, there is already a form of sort of digital wholesale money, which is basically reserves, and some financial institutions have access to that. So effectively, the point of retail CBDC, if it gets launched, is to give access to the consumer side, to the retail side, to a digital central bank money. When it comes to the wholesale side, our focus is more basically on technological innovation and improving the current system.
Okay, thank you. Next one, and this is address this for both of you. Is interoperability between CBDCs and the crypto ecosystem possible? If yes, how does that look? That's a very interesting one and very complex one, I would say. Francisco, let's start with you.
Yeah, no, that's actually a relevant question, right? And this belies the point of why are cryptos emerging, right? What use case are they fulfilling at the moment? I have to say that most of the crypto ecosystem right now is insular, right? They're basically buying and selling to each other, right? So I think the question of CBDC in that ecosystem, I think it's still a bit far off. We need to see first what are the potential benefits of that crypto ecosystem to society, right? My personal opinion is that currently the benefit is still to be seen. But there's a bigger question, and which is ongoing on the regulatory side, which is stable coins. How should stable coins be regulated, and what's the relationship between CBDC and those instruments? Uh, from a narrow point of view, stable coins, if they were regulated, they should be just like narrow banks, right? They should be safe and they should be brought into the regulatory perimeter. I think it's still an open question if CBDC should be part of the reserve asset of stable coins or not, or if stable coins should be not a means of payment that is widely used, right? So I think there's quite a bit of discussions, and we're early in those policy discussions.
Thank you, Francisco. Mehregan?
I'll keep this quick, actually. So we have said before that it's important for CBDC to be interoperable with other forms of payment services and systems. So, for instance, if a stable coin becomes a form of payment in the UK, then there will be interoperability between those. But when it comes to cryptocurrencies, as Francisco said, there needs to be a sort of an assessment of their value, basically, before we make this possible.
I would like to add something there, which is that as Francisco said, my personal opinion on cryptos right now is that they don't work as payment instruments. They don't serve that purpose. So in making CBDC interoperable with something which is not like a payment instrument, there is no interoperability there at the end. But my opinion. There's one really interesting one here. Are central banks trying to put CBDCs on DLT, distributed systems, or will they keep some centralized form of ledger? Mehregan, let's start with you.
So there is a lot of association of CBDC with DLT, but it's actually not necessarily the case that it has to be on DLT. And this is we're kind of assessing the costs and benefits of it. There are definitely some benefits that DLTs have, some innovations that they have. For instance, the fact that you can have programmable money using the DLT technology. But again, some of these functionalities of DLT can actually be implemented independently on a kind of a traditional central ledger. So it doesn't necessarily have to be a DLT.
Thank you, Francisco.
Yeah, there's not much to add. As Mehregan said, CBDC does not necessarily need DLT. So the question is, if it were in DLT, what else could it do, right? And if that extra stuff it could do is part of the public policy objectives, right? And I think that's still to be debated. Like maybe all that ecosystem of smart contracts, should it be run in a public infrastructure or that's for the private sector? And I think that's where the debate is.
Great. I'm going to try to collapse like 4 or 5 questions about this subject into a single one. Do you think CBDC may turn into a tool for exerting political power? That's a hard one, I know, but aside of your central bank positions, I mean, perhaps like in a personal opinion?
Well, if I can jump in here, at least in democracies, it's the other way around. The democratic process is putting scrutiny and checks and balances on the process of development of CBDC.
Okay, that's a nice short way to put it. Mehregan, what do you think about this?
Yeah, similarly, I cannot imagine that being the case in the UK. I can't imagine the central bank being able to use one of its policy tools as a way to exert power, just given how much scrutiny that Bank of England is under, basically, publicly.
Well, from my side, I can tell you that coming from a Latin American country and seeing my neighbors, I think that let's say this, I understand the point of these 5 guests making this question, attendants, sorry, making this question. So I think there's that risk in some weak democracy, let's call it like this. But okay, what else? There are some that I would like to. Okay, the Chinese have done a remarkable job so far with their CBDC. Are others leveraging that work for the UK and Canada? I mean, it's like China, I would say like it's the Chinese example, a use case that the UK and Canada and for sure some other central banks can take as an example to develop their CBDCs. Mehregan?
Not really.
Well, of course, we would look at the cases from other countries and their experiences and sort of the user how users are kind of receiving the CBDC. But as I mentioned before, even if 2 countries have exactly the same needs and same economy, they might have a completely different framework of assessing these needs. And so the end product, if they decide, the decision and then the end product could be completely different from each other.
That's very interesting. To what extent, this is perhaps one of the last ones, to what extent is CBDC seen as a way of providing additional competition among payment schemes?
I can go.
Yeah, you can.
Okay, sure. Certainly, it can be seen as one of the tools to create competition. But I think if you have a strong regulatory system, then the regulation itself should create a competitive market. But definitely there is a case that an alternative form of payments could create incentives for private sector to act more competitively. So it could be seen as an additional tool.
Francisco?
Yeah, if I might just add one last bit there from a bit being wonkish here is when you're dealing with network effects and platforms, competition questions are very, very hard. So one way to think about it, and this is again personal view, is the benchmark is what cash provides today. Cash provides an outside option for other electronic means of payment. So could CBDC achieve that? I think that could be one of the benchmark questions we can try to answer.
Thank you. And I'm going to say the last one. The last question is, when designing CBDC, a retail CBDC, would you consider cross-border payments features for this CBDC? Francisco?
So first and foremost, the motivation is domestic, but there's quite a bit of discussions at international forum discussing the potential for using CBDCs by harmonizing aspects of that. But it's much bigger than just CBDCs, right? And the G20 has an agenda on trying to improve cross-border payments. And CBDC is just one of what is called the building blocks, right? It could be done. It could be part of the solution, but it's not the only one.
Thank you, Francisco. Mehregan?
Very similarly for us as well, the motivations are primarily domestic. We are collaborating with other central banks to see whether it's possible to enhance cross-border payment, but it's actually quite complicated. It's not very easy. And again, there are other tools that can be used, other forms of payment that could potentially be used to improve cross-border payments.
Well, it's a wrap, I think. Mehregan and Francisco, thank you very much. This is how we finish the fourth CBDC broadcast. If you want to send us some follow-up questions, I had to leave a lot of questions unformulated here. I'm sorry for that, but time is time. So if you want also to, I want to thank the guests today. This has been a very productive and very illustrative session. I would like also to add that if someone is interested in seeing how the FNA's CBDC simulator can support taking decisions from central banks or commercial banks or authorities, please drop us an email. All our details are in the slides that we will share afterwards with you. And also we'll provide some access to the previous CBDC broadcasts. And just to finish, please allow me to invite you to the May events that we will have. Those are going to be the 5th CBDC broadcast, in which Bank of Haiti and Bank of Uruguay are going to be our guests at that time, which is very interesting because it's going to be a non-G7 vision of CBDCs. And also we're going to have at the end of May, the 2nd FMI broadcast. So thank you, Mehregan and Francisco, once again. It has been a wonderful broadcast, and I hope to see you once again.
Thank you very much.
much.
Thank you. Bye.